If you're watching mortgage rates, the only thing I want you to watch today is one thing. It's this over here, oil. I'm going to show you the correlation between oil and mortgage rates. So do you realize oil was about $60 a barrel before the conflict, ran all the way up to $120 a barrel? Now it's sitting at 90. It's down 4% today. Is it going to go all the way back down to $60 a barrel? And could mortgage rates get back to 5.99? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. If you need some help with a mortgage, I'd love to help you out. I'll give you all my information at the end of this video. You're here for these, so let's get to it. So yesterday we had some good news on oil in the Strait of Hormuz and Iran, and that helped mortgage rates. Actually, mortgage rates were down almost 1/8% yesterday. Rates right now, yes, they're starting the day at 6.44. So let's go over and I'm going to show you the correlation between mortgage rates, oil, and then we're also going to look at some of the breaking news out today, like the jobs report and the things that Federal Reserve monitors. So first thing I like to do is I like to start my day with the chart. So if we start with the chart, we have the MBS market. This is what I follow each day as a mortgage advisor, and I'll explain it to you in a second, but all you have to understand is that number up through there. If that number's green, that's good news. That means mortgage rates are coming down. So what this is the price of a bond. It's a mortgage bond. So the yield on this thing is the biggest percentage of your mortgage rate. So as the price of the bond goes up, mortgage rates come down. Okay, so let me show you a correlation. The war started about 3 months ago, lasted a lot longer than I thought. But if you look at this, we had mortgage bonds all the way up here. Remember I said the higher the price, the lower the rate. Well, this is when mortgage rates were about 5.99. Okay, then the bond market just crashed because of the Iranian war. As oil prices go up, that's inflationary. Okay, as inflation goes up, the markets don't like it, especially bonds. So they go down, 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 down. As this goes down, yields or rates go up. So now we started our descent back up. How high is this going to go? Well, if we look at a 2-day chart, it's pretty good. We got a gap here. So the trend is going up. So what should you do if you're a homeowner right now? Should you refinance now? Specifically, what should you do if you're looking to buy? Are rates going to continue to come down? Should you hold off? I'm going to tell you that here in a second. But let's break down the economic news we have for today, because we also have to look at the fundamentals. Because the markets look at a few things. They look at oil on the inflationary front. Then they look at the jobs numbers and the jobs report and wage growth and the growth of the country. So we got a lot of these pieces of the puzzle today. So we had initial jobless claims come in today. Last reading was 190,000. It went up to 200,000. Well, it was less than economists expected, and I'm going to give this a thumbs up. It's kind of in line. But the good news is continued claims. See up through here, continued claims was 1.77 previously. And it was supposed to spike up to 1.8. It actually dropped a little bit to 1.76. Staying under 1.8 million is a fantastic feat. Then you go down through here, unit labor costs. How much are corporations spending on unit labor costs? Well, it actually went down from 4.6 to 2.3. It went in half. So automation's helping out quite a bit. So that's what's driving down the cost here. So let's get over and see, okay, we have costs coming down. We have a pretty good labor market, and we have oil coming down that's helping on the inflation front. So if you go over to the stock market or the equity markets, how are they doing? Well, I could probably give you the thumbs up on that. We have the Dow Jones up, the S&P up, and the NASDAQ up as well. You realize we just exceeded the record high on the Dow Jones and the NASDAQ. Okay, so the Dow Jones just hit yet another record high, and the NASDAQ is hitting record highs every day. The reasons for this is oil. As oil retreats, you're going to see inflation retreating, and the markets are going to rally off of this. You also see the 10-year Treasury interest rates dropping as well. So the biggest culprit right now is earnings. If you don't believe me, let's go to some of the earnings reports. If you look over my shoulder, we have earnings on the FTNT at 36%. You have Axon up 25%. You have Ketos under that up 33%. The earnings right now are just killing it. And then if you go over to this headlines news, what do we see here? McDonald's earnings tops estimates despite challenging environment. Peloton beats estimates. And why? Well, you got costs coming down, and as you have oil coming down as well, this is going to truly help the inflationary numbers. So when you get all these good news reports coming over to the bond market to see where mortgage rates are going to go, what's going to happen? Well, let's get over to see what the Federal Reserve is expected to do in 41 days. So what this report is the Chicago Mercantile Exchange. They put a report together basically every day, and they tell us what the odds are of the Federal Reserve, what they're going to do at the next meeting. Are they going to stay steady? Are they going to cut? or are they going to increase rates? And I don't really think there's any chance of them increasing rates, but let's go down through here and see the odds. So right through now, there's a 95% chance they are not going to cut rates at the June meeting, but there is a surprise down through here. If you look all the way at the bottom, in December of 2027, there's odds of a 36% chance that the Federal Reserve will increase rates. That's a year and a half from now. They don't even know what they're going to do next month. So we're going to throw that on the back burner. My concern is right through here, and what I'm expecting is the Federal Reserve, the Iranian war is going to be over. Oil prices are going to continue to retreat. This is going to be fantastic news on inflation. This is going to drive these numbers to the point where the Federal Reserve will be able to cut mid-year or in Q3 of this year. So that's my expectations. So what should you do if you're looking to buy a house right now? Let me give you my thoughts on that. And then after that, I'll explain to you guys, if you're sitting out there as a homeowner, I'm going to give you some tools you can use to make sure you don't miss if we hit 5.99 again. So here's what I'm advising my clients right now. If we get a contract in, I'm locking you in. Okay, the reason being is in a day, a tweet, a drone, these rates can spike right back up. And I don't want to put you through that because a lot of people, they're struggling right now to just afford the houses they can get into right now. So as rates go up, it just makes that house a little more unaffordable. So we're going to lock in. But what do you do if you're looking to buy maybe 45, 60 days or in the late summer or later in the year, or you're a homeowner right now? I think you're going to be in a good position because I think mortgage rates are going to continue to come down as these oil prices come down. But if you're a homeowner right now, I got some tools for you. Just go to my website, and here it is, therateupdate.com. There's a tool right up there that says RW 2.2. That's RateWatch 2.2. I created that because a lot of people are like, I keep missing these rates. Dan, can you just let me know next time rates drop? And I'm like, I can't track these things. So I started and created that thing over there. So if you want me to track the rates for you, I'll do so. I can even track how much of a monthly savings you would have. So put your mortgage information in there and then just sit back and let me monitor these things. But here's what I'm advising my clients to do if you're a homeowner right now. Just put in your application. Let's float your rate until we see the markets move one way or another. We're going to continue this drop down. And then as it goes down, I'll alert my team when I think rates are bottomed out and we should lock in. But if they continue to drop, we'll just keep floating you all the way into locking. So those are the things that we can help you with if you work with me and my team. So we do have an interesting slogan here that I created about a couple of years ago. Our slogan here is one application, one credit pool. We're going to compare your loan to over 30 different lenders. So let me tell you who I am and what I do. So folks, my name is Dan Frio. I'm a licensed loan officer in all 50 states as well as Puerto Rico, and I've been doing this for over 37 years. I'd love to help you out. Okay, if you're looking to purchase, you're looking to refinance, maybe you need a DSCR loan or a reverse mortgage, I'd love to help you out. I'm licensed in all 50 states. Here's the cool thing is we're set up with over 30 different lenders, almost 40 different lenders to make sure you're getting the best rates and lowest fees in the markets. How do we do all this? Well, check out a video I do each Wednesday. Right up through there, I show you behind the scenes exactly how we do this and the whys behind it. So last but not least, let's get back to the chart to see where the MBS markets are right now. So we have the MBS is up 16. I'm giving that a double thumbs up because yesterday we were all the way down here. Let's see if we can calculate this. We were at 98.7. Now we're at 99.0. So that's a pretty darn good run in a 24-hour span. So hang tight, folks. It's going to be volatile, but if you're out there, please subscribe to my channel down through there if you're trying to figure out what's going on with mortgage rates and the whys behind it. You realize I have over 9,000 videos down there, so make sure you don't miss any of my videos. Subscribe down there so you can check out and see if there's some videos that you like and there's some videos you're going to pass on. But overall, I hope you learned something. That's my goal. So thanks for watching. God bless. Have a fantastic day. And I'll see you here tomorrow morning at the opening bell to see how these things get affected with tomorrow's news. Thanks again. Bye-bye.